Hi, Warriors. How's everyone doing? Alexander, Ingmar, how are you? James, Kman, Hugo. Okay. Ha ha ha, Hugo. Happy Bank of Beavers Day. Okay, but Ryan, you have to tell me. Galaxy, Mike, Paul, how are you? Mark, welcome to Face. So, Ryan, I'd like to start with you since you warned us about this. How are you today?
Hey mate, how's it going?
Pretty good. So you said, let me quote you, markets could be a bit wonky right now during this period, and you talked about the election in Japan where it could come in a couple hundred pips in your face. That's what it's doing. Nice call. So what happened
Nothing.
with the
Absolutely nothing.
election?
There's no news behind it. It's just a continuation of this move we're now. We're now busting 153.
Yeah,
You need to pull your price down a bit down. It's gone off your screen,
yeah,
even while
there
we're
you go.
talking.
Yeah, there it goes. So, what's interesting is a month ago, it was, we were all hoping for a chance to, sell this up here around 52, and it went through
Yeah.
it like a knife through butter. I haven't done the fibs on this, so
The 61.8 is at 153.40.
okay, so we're almost there. All
Yeah.
right,
But
okay,
you can't really trust coloured lines on a screen at the moment. I thought we might be stopping at 147 weeks ago when we got that
yeah,
rally in yields, but that kept going, and this has kept going. So you pick tops at your peril at the moment.
yeah,
All,
everything keeps
will stop
going.
somewhere. Yeah,
I've been looking for a bounce in euro for about a week, and just keeps eroding. Um, Cable a little bit better, but not much.
no,
And Aussie approaching important 200-day moving average right here, and this low right here. I
yeah,
was looking at Aussie, even though it's pretty weak today. Um, this doesn't look terrible, that it could be one, two, three. But Cable's the one that's the last of the group pressing yesterday's lows. Would you
yeah.
take a stab there?
No, not at all. 129.50 is a bit of a level here, but we've already gone 6 pips below it, so it's continuing to push to the downside. I I tried a little knife catch in euro dollar around 108 yesterday.
Yeah,
Managed to grab 10 pips before getting stopped on the rest. So yeah, I'm 107. I've said it for a while now. If we broke through my 108.70, 108.30 zone, we're heading for 107, and that's about the only level I'd maybe look to try a counter move.
okay. And this is surprising. We're going to, I thought that we'd have some type of pullback in here before we went to 106. Maybe because you look at things now and you go, wow, you know, not one corrective wave all the way up.
No, and that's dangerous. That's dangerous for traders because you see a move and you think, oh, this is going to be the top, and you go short, and then it goes another
Yeah.
100 ticks, and then you go, well, this is the move, and you go short, and it goes another 100 ticks. You can't jump in front of these moves unless you're trading really small, really tight.
10-year trading a little bit above the line in the sand here on the 10-year. Doesn't, it doesn't have the same type of juice the end did. Um, but, it's just a guess to try and top pick it here. Anything on Canada looks like we're going to set up a 3 drive here at new highs. We're only a couple hundred away from where I thought the final objective would be, 141 or something.
Yeah,
Um, so it's
I've,
it's tough to fade stuff.
Yeah,
bottom
I've
line.
slightly changed my opinion of dollar CAD, trading dollar CAD over the BOC shortly. Coming into this week, I thought we might see a bit of, if they go a 50, we might see a bit of buy room, a sell fact move, i.e., a little pop and then a reversal. And if they go 25, obviously we'll see a pullback. But given the dollar strength we're seeing everywhere else, and this one isn't really moving, given that, look at what it's done for most of October, and now all of a sudden it's stopped while every other dollar pair is going. I'm thinking maybe we just got a bit of a pause here, and if the BOC confirm with a 50, that'll just give it the green light to continue going. And if they go 25, that's a dip I'll look to buy, I think, given this dollar mood.
Okay. Euro pound pulling back, but so far a higher low. If I was looking for something constructive about Euro, this is the only thing I could find, is that we're not making new lows yet in
Yeah,
EG.
yet.
Yet keyword, right?
Yeah, yeah, definitely.
All right. Any comment on the yuan? Not quite as strong as the yen, but they're kind of running together, aren't they?
Yeah, it's a bit similar. There's I've got no, for once, and this has been for a while now, I've got no feel for the one at the moment. They're not
Okay.
coming out and saying anything, whether it's strong, whether it's weak. So they're happy to let it wander around, and I'll let it wander around until I get a clearer signal on it.
Okay. And why don't we go to Kman? Good morning, buddy. How are you?
Morning, Dale. Morning, everybody.
Um, you have levels where you'd be looking to get back into the long side of silver.
I actually took more off my long-term longs. I have a big fat target that I've been watching for a long time, around 35, and 34.65 today. I said, well, how much more buying can they just do because of upcoming elections or so? And I've decided to take a bit of profit. So I'll be looking at getting back in around probably 32 and a half and then 30s. And if we get a setback, but if is still the big question, because the metals are the only thing that the market really wants to buy. If you look at
Yeah.
the rest, taking of course equity markets out of the equation, I'm talking about FX and pairs to trade. Yeah, that one, the S&P, it's looks as if it may have done enough, but then I guess on the slight setback in yields, we could print a fresh high. I'm not going to touch the S&P right now because I just don't have a view on it before the elections. Yeah, that one is that the 20-year? Yeah,
Yeah.
we bonded here. Yeah. It's and we have we have an auction today in the 20 years. So we're talking about it. We would be very surprised if that auction goes really well, looking at all the rest of the bonds. So we could see perhaps another little push there. As far as the rest is concerned, I really think the yen now, they're trying to push it into the Japanese elections. The speed is such that it's I think it's a Japanese election, this one, perhaps even more than the US election right here and now. Of course, the US election and Bank of Japan holding still have started, and Ishiba's comments, but this is pure Japanese election coming up trade.
Okay.
But I'll be looking at but I'm not going to do cash. But if we get like another really silly move ahead of the weekend, I may buy some downside. Just buy some downside and even downside perhaps over the US elections.
In what?
In
Okay.
dollar yen.
Okay.
But I won't do cash. It's just because we don't know what the market is going to do into the US elections. We could really have like the dollar, and like this kind of panic move saying I can't buy any dollars anymore. And if we don't get any interventions, we may be trading 158. Who knows?
Do you think that part of this dollar rally is, the catalyst is the market pricing in a Trump win?
Yeah.
Uh,
This is it. This is exactly what we are doing right now. Okay, there's some differences if you look at the individual currencies versus the dollar. We can see some differences. Like for instance, euro is weak because of fundamentals. The yen is moving very fast because of the upcoming Japanese elections before. But if you look at the global Trump trade, this is what the market is now trading, and I, for one, think that it can continue for another week and a half. But I think they will have front run a Trump election so much that I'm not even sure it will last after a Trump election. That is the question that I'm starting to ask myself, because I personally think that Trump election is, if people want to buy dollars, fair, but if they buy it in such a way that everything is already traded, I'm going to be ready to counter trade it, because I think at the end a Trump election will be negative dollars.
Okay. His running mate has spoken that that's their preference to, so that exports could get better here in the U.S. So, that could be, buy the rumor, sell the fact on the Trump win. I notice Greg is here. How are you, Wizard?
Hey man, I'm fine,
Hey,
thanks.
buddy. So
Hey.
before Greg goes to Sicily to become a made man, I thought we'd get a look at his wave counts.
Yeah, sure. That's why I'm
So,
here. Let me
all
share
right.
the screen.
Yeah, I'm going to give you the charts, Grega, and also want to acknowledge that Grega was right about gold and silver. I wasn't. Kman was right about gold and silver. Ryan was right about gold and silver. So, really, the
Stelios,
whole team.
Stelios,
Stelios has been right about silver for about, I don't know, 8 years now.
yeah,
So yeah.
yeah.
Maybe okay, so here we are.
Yeah, I mean,
Yeah.
the most important is, US yields are moving sharply higher.
Yeah.
So correlations are not in best place for the last few weeks, especially with stocks being still sideways, despite still that strong move to the upside on US yields and US dollar. But we just have to respect what the market is doing, and the most visible and clearer waves are definitely on the US yields or notes. And here we have these 5 waves down. And these 5 waves suggest that, yes, we could see some stabilization. As you said yourself, you are also waiting on this rally on the euro dollar. Still, this market just keeps moving to the downside. But it really tells us how volatile market these days is. And I just think that whenever we see some pullbacks, there should be more downside here, and it means that US yields will most likely obviously continue to the upside with the US dollar. And now if we mention the dollar or where dollar could go, I'm looking here at the dollar index. I think that there is actually a room for 106, even 107. But we really have to consider and respect what the big picture is. Okay, if that's only because Kman said that because of elections, then maybe this market and moves will again change their flows after the elections are done, or maybe going into the end of this year. So when I look back, I still think that the major top here on the US dollar has been reached back in 2022. And since then, we have 5 waves down and now counter trend movement that is just becoming more complex. And who knows, maybe US yields will even go back close to 5% before potentially topping out here. But I think that that's a very strong resistance up there at 4.7 to 5%. And this obviously means that the US dollar could actually stop around to 107. So I still think that this, obviously, this dollar strength could last for a few more weeks. But then once we start reaching these levels, I would be very, very careful. Now, when it comes to the Elliott wave principle, I even have this chart here presented for you. So we are basically right now here at the late stages of this 8-wave cycle. Okay, so the first is impulsive cycle that is always made by 5 waves. And then you have a counter trend movement where a lot of traders, investors get confused because there are no real directional movement. And that's exactly what's happening on the euro dollar since July of 2023. So we are basically now just still consolidating, but looks like that we could be in this wave C on the opposite side of dollar index that I just described. So I think that very strong support could definitely be around 104 if we get there. I wouldn't say that euro is going back to this levels from 2022. I know obviously that ECB is very dovish, and much more dovish should be because of Germany compared to the US that has an economy in much better shape. But even this this sentiment and dynamic will change at some point, and maybe this will happen once we reach levels around 104. But as I said, for now, dollar is still in uptrend. There's still room for more weakness on euro dollar. And if someone is looking for some levels to short, I firstly thought that maybe we'll see some support around 107.70, which is here from August 1st. But if whenever we see a bounce, I think that the next bounce is still going to be opportunity to short this pair and maybe watch for these levels, as I said, going back to these 2023 levels, or before that, you have April here at 106 and 107 also. So after the bounce, I would be looking for more weakness. We obviously have the very similar situation on other pairs like cable, but cable is showing maybe some kind of a wedge formation here. So it's a very late to this current impulse. So again, I would stay aside and just wait on this pullback whenever occurs. I wouldn't chase the market here like you discussed earlier with Ryan, that it's very tough to trade when the market keeps going. So you just have to sit back and maybe wait on a pullback if you're not in, because definitely a lot of dollar strength has already been shown here. So you want some better levels. Looking at Aussie, I think it's one of the weakest today. I'm not sure what it's behind this move. I noticed that Hang Seng Index is quite stable above 20,000, but even this one obviously can be moving into some support here around 0.66 level. Sell rallies.
The 200-day comes right in there, Grega. Today's low.
Okay, right here where we also had this September levels. Yeah, September 11. That's definitely very important. Some short-term support, but because of the dollar, we never know if we really will get this bounce. I wouldn't trade the opposite. We also have Bank of Canada, right? Rate decision. We know that inflation, if I'm not mistaken, softened more than expected. Ryan will probably know this better than me. So obviously they are looking to cut rates, but keep in mind that we are here in a fifth wave. So maybe there is a lot of already priced in here and could be buy the rumor, sell the news impact. So we are in very late stages here, but again, like each other pairs, buy the dip is still, in my opinion, the best scenario here, and just be patient and wait on those pullbacks.
S&P?
S&P, yeah. I mean, here we have some small triangle, maybe building up at the top. So maybe another push to the upside, but I'm not really sure when this one will materialize if we consider the dollar keeps moving higher. So if dollar maybe will hit some resistance and made a pullback, this will be a chance for the S&P maybe to easily break to the upside. But overall, if you count 5 waves up from September lows, then you certainly see that we are in very late stages here. Or just S&P 500 will stay sideways and very undecided till the US elections. But after the next very interesting dip here to 5,000, maybe 750, I think that that's still a very solid level for potential another push higher.
Okay.
Finally, maybe gold.
Okay.
It's a very, I mean, we were looking for this support 2600. It was very beautiful technical levels, not only technical, it was also the area when the Fed cut 50 basis points back in mid-September, then retested these levels, and now we are just taking off. But keep in mind that we are in a fifth wave, right? So I think that there are a lot of investors, retail traders that want to grab some piece of these gains here, but keep in mind that whenever we get a lot of interest in this market, it means that we are most likely in some very late stages of this recovery. And I think that we really could be moving into some very serious and strong resistance not that far away, especially when it comes to time perspective. I just think that by the end of the year that we will step into a new correction. If you look at silver here, we have some very important levels there, 35, 37. Now, if someone wants to chase and just say that we will go to 37 and 40, well, if you were not in this market, let's say from 20% lower, then definitely it's way too late to be in this game right now, unless you are maybe looking for some short-term trade setups. But overall, you can clearly see that we are coming out of this triangle and that we are at the 61.8% of this very big decline. So I just think that you really have to be careful here and just be aware of this retracement. And if I would have to pick the next level for potential bounce, $30 would be the levels that I would watch for.
Okay, so you had gold after it completes pulling back to 2,400 for a big four.
Well, it really depends where we, I mean, if we would stop right here around 2,800, then, and we start breaking this channel that is currently building from August lows, then I would be looking for support around 2,500.
Okay.
Yeah.
All right. So similar scenario in silver. If we're in move 5, where could we pull back to? Yeah, exactly. So we just, as you can see here, demonstrated, we are in these late stages of this extended wave free here. So you want to buy here, not chasing the markets up there. Right. But of course, it can always shot up much higher and make an extension, but that's not something that you would try to predict or trade because it's impossible. Great, Grega. Really appreciate it. Have a great trip. Thank you. So everyone, another advantage of, you know, being in the chat room and also having Grega's work and Andre's work at your fingertips. So Blake, good morning to you, buddy. Finally got to you.
Oh my God. Hey, good morning. And Grega, thanks for being here. Have a great trip.
Thank you, man.
How are you, Blake?
I'm okay. I got run over by the yen train. You know, I've tried to stand in front of that. And last night I'm like, I pulled the plug on it. I'm like, there's no way I can't stand in front of this thing. So I, you know, got out of the dollar yen. But look at this thing. I mean, it has been a crazy move. You know, once it started to reach above this resistance, I was just like, no, I can't stay here. And you know, everybody is, as those guys were talking about earlier, everybody's looking for that 152. But man, it is just it's launching. And but it's not just, you know, the dollar yen, it's the dollar across the board. There is an article in Reuters overnight and some headlines about, you know, the ECB sources talking about they have to bring rates low enough below where they feel nominal rate is to be stimulative for their economy, and that's weighing on the euro. So the euro is at really critical support today. This is a trend line support that a lot of traders were looking at. You know, we've obviously surpassed the double top, but it's like I said, it's not just you know, any $1 pair, it's all dollar pairs. They're all moving. One of the ones that haven't broken out and is the dollar mex. The dollar mex is getting right to resistance. But you know, I guess if the Trump trade is truly on, why couldn't this one, you know, take off above highs? So One of the other big ones that's coming up towards resistance is the US dollar Norwegian krona. This one's this is the long-term trend line since we had that COVID spike lockdown, and this is one of those currencies that if volatility picks up, Norway usually gets smashed. I mean, you can see this is what happened during the COVID lockdown. So you know, if volatility really goes on the rise, can the US dollar Norwegian krona really, you know, press a breakout? So you know, we got that. We got Bank of Canada today. I mean, the dollar yen's just on a rampage. The Aussie and the Kiwi are just getting demolished, and even the sterling's, you know, even the sterling's falling. You know, it's at the 618 retracement, or you know, slightly below, but basically at the 618 retracement. I mean, it's hard to stand in front of this, and that's one of the things that we talked about. You know, been talking about in the chat room. It's really hard to stand in front of these moves when you're just seeing one-way markets, and we still have 2 weeks before the election at that. So some really big moves going on right now. And you know, it's interesting as far as the dollar CAD goes. I know Ryan had mentioned something about his strategy changing because of the dollar strength that we've got here. And I guess the question is, you know, can the dollar CAD really reach past 140? And the answer to that question is, yeah, we can. I mean, you look at long-term levels in the dollar CAD up at the 146, 147 range, and you can go way beyond that to 140, 160s. But it's like you look at what's happening in the dollar across the board. What's stopping the dollar CAD from actually breaking through 140 and going to 146, 147? You know, I mean, what are your thoughts there, Ryan? Just since you were talking about the Canadian earlier.
Yeah, just yeah, obviously we can if we get through 140. There's a bit of tech around 142 something, but otherwise it's really up at that big huge double top near 147. And yeah, if this dollar keeps going, dollar CAD can join in as well. So yeah, it's the only thing you'd have to say is it's done a bit already. So maybe it's just feeding a bit of exhaustion, but I don't know. I'm tempted maybe to nibble a little long into the BOC in a bit, and then still buy a dip, because I think it's likely to come roaring back again.
Yeah, you know, Kman said something a little earlier about the dollar and post-Trump, and this is the one thing that I've been thinking about a lot is, you know, let's say Trump does win the election, which the market's obviously pricing in right now. And I want to go to Kman and ask this. You know, if Trump wins, good morning. If Trump wins and the dollar comes under pressure, or excuse me, continues to rally as a result, because everybody's like, oh, the tariffs and yada yada yada. What happens? And this is like my thought process is, you know, I believe and we've talked a lot about this on the show with Dale. Let's say stocks actually do find some resistance, and people do the buy the rumor, sell the news, and you know, the S&P goes to 6,000 or 6,200 and then reverses. Would the dollar catch a bid on safe haven flows, then thinking, oh yeah, tariffs, so the dollar continues to strengthen? What would be the long-term dollar bear argument aside from deficit, like, you know, just more fiscal spending? What do you think, Kman?
To me, it's going well. If that's the playbook, it's going to happen in 3 phases. You're going to have what the market is doing right now. Then you're going to have the slap everything effect, probably supporting the US equity markets as well. I can't find enough US products to be in because this and that. But I think US is going to need international trade, and it's going to be expensive to import stuff, because if you slap tariffs on everything you import in the US is going to be much more expensive as well. And also, well, you look at the US, but don't forget all the rest. I mean, imagine that they start to slap tariffs on stuff in Europe. Europe is not going to just sit on the sideline. Well, they will do for probably a while because they're pussies. But no, I think the next effect will be that that there's going to be an erosion in the US. That is my playbook personally. And if the market wants to buy really dollars for a starter, and then perhaps even dollars when, first of all, when the equity market turns on much higher rates, there's going to be a crunch point where it's all going to fall apart if Trump really does what he promises and what he's been talking about. And I think the fact of what Dale mentioned, his running mate putting the dollar lower because of exports, it may be all too little too late, and the market may slap the dollar even before they can export the first car or the first whatever. And yeah, and for instance, if he slaps tariffs on everything microchips, everything works on microchips now, from your dishwasher to your phone to your car. It's all about that. So if he slaps tariffs on there, he's going to shoot himself in the foot. So I think there's many reasons or many things that I'm looking at, or signals that I'm looking at for calling the level to fade the dollar if we get a Trump election at some stage.
Yeah, it'll be interesting. We need to be mindful of the time because I know Dale's got his interview here. But guys, if you want to continue like these conversations and more, make sure you jump in the ForexAnalytix chat room. This is like the best time to be involved in our community because we are talking about markets and quarter pounders and cheese and all sorts of betting markets and how we see everything. So make sure you jump in the ForexAnalytix community. It's only $1 for 10 days to try it out, and it's the best place to be ahead of this U.S. election. Dale, I know is your interviewee here?
Yeah, James is here.
James is here. Okay. I want to thank everybody for being here. Grega, have a great trip. And Ryan, Kman, appreciate you guys. And if you're not listening to them in the Flow Show, make sure you get up and listen to those guys every single day. So Dale, have a great interview, and I'll see you guys in the chat room and on the morning edge for the Bank of Canada rate decision.
Okay, thank you, Blake and Kman and Ryan and Grega for
Thanks,
laying
mate.
it out there for the community. Nice job, guys. And I'm going to bring James Anderson in, who said nothing was going to happen in the precious metals in the summer, and that things would begin to get active again in the fall, in September. And here's a guy who's been in the physical business for a long time that saw the seasonal trend being dull in the summer and then action picking up. Welcome back, and great call, James. How are you?
Hey, Dale. I'm very good. It's good to be back. Good to hear your voice.
Yeah, good to hear yours too. So low profit taking in metals on this recent run. Has the public participated? Have your phones been busier during this run? You're getting guys like Paul Tudor Jones, and I think Bank of America came out a few days ago and said gold is the last safe haven because of the debt that takes treasuries out of it. What are you seeing in the market here, buddy?
So I think it's validation for all the people who
Yeah.
have been stacking for so long based on the fundamental factors, pretty much since the GFC 2008. That's basically been a trend underlying in the United States of America and around the world, to be honest. But in silver, especially in the United States, it's validation that that the thesis is going to start playing out, and it's starting to play out in real time. What I see is, I think people who've been buying, at lower spot prices are probably pulling back. Hopefully they've got their positions now, at least the ones who are savvy and understand why they did it in the first place. And new entrants, I don't think really going to come in until you have a situation where we go beyond 3,000 gold. It goes beyond, pulls back, and then goes beyond again. And then likely the same with silver. You got to get past 50 and it has to become support. you know, and that'll ultimately bring in the Main Street and the institution side. But from here to there, you know, there's some excitement to come, a lot of volatility, probably some type of deflationary nightmare in between. But yeah, I mean, it's
deflationary nightmare. So okay, I want to
Sure.
delve into that. So deflationary nightmare. I mean, this move in the dollar has surprised me. It's had no impact on the metals until today. That could be a sign
you're
of
right.
deflation. So we've had an everything bubble. Could we have an everything deflation?
Yeah, it wouldn't surprise me at some point, because you have so many banks around the world that are insolvent on a mark-to-market basis, and they just haven't admitted it yet, you know. And so what's the chain reaction that kind of sets that off and sets off, you know, some type of coordinated event around the world? And I expect it. I mean, there's the second part of the global financial crisis hasn't come yet. It's not arrived yet. It has to, in order to clear the system, in order to structurally reset and turn the page from the post-World War II super cycle into a new era. And that new era is probably more of a multi-currency regime, US dollar not being extremely dominant like it has been for the last, you know, 20, 30, 40, 50 years. So yeah, it's still got a lot of ways to go. And these are massive tectonic plates that are moving. But you know, we're looking at something that's going to take 5-10 years to run out and play out. And you know, you look at the fundamentals of the United States and the Western world and how indebted they are with pensions and unfunded liabilities. I mean, inflation, like Paul Tudor Jones said yesterday on, you know, CNBC on Squawk Box. I mean, that's essentially generally how governments historically get out of this mess. They don't flat out default. They just really, really debase the currencies. And that's where we are.
Okay, so what do you think? You know, I think we're completing something, this whole big move up here. Can you give me a narrative on whether there's a $50 or $100 left on the upside for us to see for us to see a pullback towards 2,400 or so?
Yeah, I've been finger hoping and you know, looking for that pullback for the last, I don't know, 3 or 4 or 5, 6 months. Because, you know, my brother for the first time ever was like, yeah, you know, I'd like to get some gold. And I'm like, oh, now you want some gold.
So
beating on your head about gold for 10 years.
The brother indicator. So okay.
He wants it at twice the price. That's fine. Nominally twice the price. That's cool. But you know, when he says it, it perks my ears for him to say it. And it's not, he's not a dum-dum. He understands fundamentally why you'd own gold. But the dum-dums will come later when it's $4,000, $5,000, $6,000. You know, that's where it starts to get, you know,
stupid.
Really stupid. I mean, I remember picking up the phone in April of 2011 a couple times just to be on the retail side on the phone and talking to the type of clientele and the type of demographics that were calling and buying at $47 spot silver in April of 2011. And these were not the brightest and sharpest tools, right? These were people who were acting on absolute emotion, and they were quick to sell when, you know, spot went back to 30 and into that interim bear in the second half 2010s. So, you know, that's just generally how, you know, manias start. And you know, this thing has a long way to go. You know, I think I've driven home every time I talk to you about just how big of a bull market this is going to be. This is going to be the historic gold bull market of all time. It's going to blow it'll probably blow 1980 away in terms of size and scale and how many things it touches and how big of a change it makes.
Did you get anything out of the BRICS meeting that happened the other day? They were talking about their currency backed by gold.
I never do. I always find that to be more of like a clickbait thing than anything else. I mean, to be honest, Dale, I didn't even go and look at it because it's such a no news event generally. I mean, if I hear something that has credibility, I'll go look into it further. But thus far, it seems mostly clickbait and like, oh, look at the pictures of them all being together and, you know, just the same old stuff. You know, this has been going on for 15 years now. You know, it makes me think of like the Petro Yuan and all the other clickbait things that we've seen in the past. And so, yeah, I mean, the BRICS are obviously, they're doing a lot of things tectonically and fundamentally to change the way they trade. And there's a lot of change that's happened. China now is the world's biggest exporter, and in terms of the amount of direct yuan settlement, it's almost half of the stuff they export is in direct yuan settlement. I mean, that's gigantic compared to what it once was. So there is change happening. It's just, I think a lot of times people hype these things up, like this BRICS week in gold is just what's going to take it up a wall. I don't buy that.
Yeah, yields haven't bothered it yet.
No.
I've been surprised by the move in yields. You know, when we bottomed, I thought we'd get back to 4. You know, I see some resistance here, but could yields, if they really start to head back towards 4.75%, have some impact on price?
It's possible. That's possible. I think you know, when you're talking about yields, that's probably the most important thing. You know, the dollar strength relative to other currencies is usually important too, but they're not direct.
It's not
exact. You know, so it's really what's driving spot price is always murky, right? It's one of those things. It's a guessing game. That's why gold is so difficult sometimes.
Can you see a scenario where China might be forced to sell some of their gold?
No.
With what's happening with her?
What I would foresee is a scenario where China declares the amount of gold that they've been importing since 1980 at some point when it fits their agenda and their timeline in terms of what they want to do on a strategic basis for the next 50 to 100 years. Okay. So no, China, when you look at physical gold flows and data from 1980, especially through the 2000s, they basically through the 2000s have mimicked Russia in terms of the amount and the time that they officially declared their increases, and it's right in line with Russia. So they had this plan together for 20 years. So this has been a long-term agenda, and they have a lot more gold than they declared. I mean, China, when you look at it on a, you know, on gold versus their actual sovereign reserves and stuff, I mean, it's like a single-digit percentage. It's not even close to what other major economies are. They got to get to 20, 30, 40% if they want to be, you know, big at the gold table.
Okay, you know, I've witnessed a few things with wars over my career, that metals, and not in this case, you know, oil prices would go up into the attack, and that once the attack takes place, that some type of top is put in. Do you think we could get a top with a retaliatory strike by Israel on Iran?
Yeah, you know, ultimately oil, I think is going to get cheaper versus gold over time. There could be a situation though, if the war gets acute, that oil goes up into a spike. But in terms of, you know, short-term gyrations, I'm not savvy enough to sit here and give you a confident answer one way or the other.
Okay. Well, I know you are confident about this long-term, the gold-silver ratio. So actually last week, I had to put my clown hat on because before Friday, I thought we were going to get a move to above 90. And anyway, so I put my clown hat on. It's off now. I'm just a host now. I'm not an analyst. So tell me, you know, you have some pretty good downside objectives there.
Yeah, on this move, I think, you know, this move for silver feels like it's going to run into the 40s in spot. And that gives the potential of the spot gold silver ratio to go below 70, maybe even low 60s. If you pull back like on a long term, it would be hard for me to see it cutting through the low 60s before some type of deflationary thing. It kind of makes it go back up. And so, you know, I would say the move below 70 is pretty conservative. By the end of Q1 of next year, I would expect that that'll be the play.
Okay. So the gold silver ratio into the 50 range. So
no, into the 60s. I don't think 50s. Not in this run. I think once we get deflation and then we go infinite QE globally and dollar goes into secular bear, that's when we do the crazy gold silver ratio.
Okay. So there's a weekly. But you would sell rallies and stay with the gold silver ratio heading lower.
Yes, I would think the gold silver ratio is going to be heading lower. you know, through Q1 of next year, barring some type of wild deflationary, you know, thing coming out of, you know, left field.
Where do you think the deflation could come from? Could it come from tariffs are inflationary?
Yeah,
That
no,
they just go. What's your view on tariffs? Because I brought up quite a few times that I think it was Smoot Hawley or Harley tariffs in the 30s contributed to the depression.
yeah, the combination of factors, the 30s, the gold price that they've set was too low. It should have been about 70 an ounce, not 35, right?
Yeah.
And so that was one thing that continued the deflation. And yeah, these tariffs will be inflationary if they do it, right? And it's a real nightmare in terms of you know, manufacturing and stuff and getting products and shipping out stuff. So that's going to be inflationary. And what you're doing, obviously, with the hope is to build more manufacturing in the United States. That's inflationary. So, you know, all roads are essentially leading to inflation. Even with the deflation scares out there, you know, the central banks proved during COVID that they're faster to respond than ever. And they come in largesse in irresponsible fashion, handing it out to anybody who's on the inside. So I would expect to see similar. But there will be losers. There will be tons of companies, I'm sure, that go insolvent from here to there. And there's a lot of banks that have to be consolidated. And the banking system, I think, in the United States, there's like 4,500 or so thrifts and banks and credit unions. And you know, that number wouldn't surprise me to go down to half, you know, by the end of the decade. So you have a situation where, you know, they want to drive down interest rates, they want to cut rates, but you have a lot of banks that are sitting on a mark-to-market basis in a lot of trouble. And the FDIC knows that shitstorm's coming, and they talked about it in meetings publicly. We had the videos of them talking about it. And you know, ACH is so fast now, they have to react quickly, or else these companies go under and the big ones gobble them up. So my expectation is that trend doesn't end.
Okay. So, you know, we're going to have some issues with the economy and foreclosures and you know, do you think that the real estate market is going to suffer during this deflationary period?
Yeah.
And do you have a ballpark guess for when that might set in? Is it a 2025 thing?
Let me look real quick. Just I always look at the long-term median house to gold, and just kind of give you a ballpark of where we are. And the problem with the chart is it's an average, not a median, but I can at least look at it real quick to give you a feel. On a log format, on like a long-term basis, like the low in 1980 got down to 100 ounces for an average price. An average price of a house is like, you know, 450 grand right now, right? So 100 ounces of gold should be able to afford you that by the time this thing goes into its mania. And silver, you know, it wouldn't surprise me at all to see 5,000 ounces or less be able to get you a $500,000 home, you know, before this thing mania is out. It'd probably go lower than that, but I mean, you know, timing all that stuff would be very, very difficult. But that's the trend we're at. I mean, right now it's like 15,000 ounces of silver to get you a $500,000 house. It's like how much gold? 200 ounces of gold to get you a average price house in the United States. So you're talking about tripling and doubling in real purchasing power in terms of real estate.
Are you glad you're in the mountains of Panama instead of here on the ground in the U.S. with the elections coming up here in 2 weeks?
Breaking news, I've actually relocated back to where I grew up and where I'm from in Cleveland, Ohio. So
wow, welcome back to just in time for just in time for the Civil War, James. All right, so you know, that's interesting. Was it to be with family? I know you were pretty happy up there.
Yeah, no, it was a great preview of a place that I, in the future, wouldn't mind having a second house in. But yeah, it's a combination of family, my old folks and my siblings here, and the community of people I know here, and then career-wise, it makes sense at this point and stage in the bull market to be in the United States.
Okay, well, you know, great to have you back, James. And what do you think in this election? You want to make a prediction?
it seems like Trump. I mean, everything's
Yeah.
pointing that way. I would imagine he'll win, unless there's some type of, surprise at the end. It seems it's been trending that way for about a month now. So
Yeah.
my bet would be on him, probably like a 65% bet on him.
Okay. Well, I think that, the market's pricing it in.
Mhm.
Strong dollar, Trump, DJT's been going up.
Mhm.
So that's the way it's looking right now. Um, any other hot spots, Geo? I mean, people hardly even talk about Ukraine anymore.
No.
What?
Hopefully that gets settled at some point and they just divvy up, whatever pieces of land, and people stop dying, unnecessarily for
Yeah.
they took a good swath of land. They just need to sign on the dotted line and get it over with, and let things settle. Hopefully, no more escalations on that end. But with this Israel and Iran situation, that would be I would keep my eye there, and I'd keep my eye on Taiwan still. I mean, China at some point is going to make a move there, and that will throw a lot of things into flux. So those would be where I'd really focus on.
Okay, so China making a
Yeah.
move. Okay,
Yeah.
I mean they've been rehearsing. They had a
Yeah.
blockade there a
Yeah.
week or two ago. Do you think
Mhm.
they'll go sooner rather than later?
It wouldn't
Like,
surprise me at some point this decade. Would not surprise me at all, and it wouldn't surprise me at all to see us stand down.
okay.
Yeah.
All right. So James is strong back in the US
Mhm.
to deal with whatever we're going to look at in a few weeks. And if people are interested in buying physical gold, best way to get a hold of you and your company, James,
Yeah.
or silver.
Yeah, sdbullion.com. We're a top 5 retailer in the United States. So if you come to sdbullion.com, you can find pretty much all the most important bullion products there, and at reasonable prices, at competitive price points, and shipping and all that stuff is fully insured and fast. So
Okay. You also have a Substack
yeah, I
site.
do. I do. People can just sign up, so I have their email. At any point, I might start doing that at some point. But it's just a way for me to keep tabs with people, and they can give me their email, and I'll always be with them at least through the bull market if they sign up there.
Okay. And James also has a YouTube channel.
Yeah, I run the SD Bullion YouTube channel. So every week I do on Friday at the end of market trading a quick rundown, basically of what happened in the precious metals that week, and I try and curate the most important stuff that I see in my eyes. 10-15 minute video typically, and so people either they watch it Friday night or they'll watch it Saturday morning when they're doing financial stuff at their office, at home, or what have you. But it's got a good following, and I try and be respectful of people's time. 10-15 minutes, that generally gets the gist.
Yeah, look at these views.
Yeah,
Huge. All right, James. Great to talk to you again. We'll be talking again in January, and we'll be looking at a brave new world together by then.
All right, Dale. It's always good talking to you, man.
All right, James Henry Anderson. Find him on X at James Henry and I've given you a few places you could find his stuff and his work. And this guy has a handle on what's happening in the physical market. Have him be, part of a resource for you, because maybe you need to own some physical and not just the paper. So that's a wrap. I may have missed the silver futures move, but I've been long and stacking from 21 and lower, James. So
yeah, that's always keep a physical position and then trade around it. That's generally how the savvy run
yeah, and I'm not giving my address.
it.
All right. So anyway, James, thanks, buddy. My
Right,
trading warrior brother, James Anderson, everyone. Have a great day, everyone. Be back tomorrow. Don't forget to join the team in about 19 minutes on the Morning Edge. And that's a wrap for me. People are thanking you, James. They enjoyed your presentation. So adios, everyone. Have a great day. Don't just count your coins, count your blessings. See you tomorrow.